Welcome, everyone. I'd like to introduce President of the Treasury Board and Minister of Finance, Nate Horner. Minister, please go ahead.
Thank you. Good afternoon. I'm pleased to present Alberta's results for the fiscal year ending March 31st, 2025. In February 2024, when we released Budget 2024, we knew we were in for a challenging year. Due to our competitive advantage, Alberta is a destination of choice for both Canadians and people from around the world. We all know Alberta is a great place to call home, as it's one of the most affordable places to live, work, and raise a family. Our low-tax environment and solid economy help Albertans get ahead and plan for the future. However, a growing population brings growing demands. Albertans need access to hospitals and health care, schools for their children, and safe roads to get them where they need to go. That's why we released Budget 2024 as our responsible plan for a growing province. And over the fiscal year, we rose to meet those challenges, even in the face of a changing geopolitical environment and economic uncertainty. Economic growth was steady as we focused on building an economic foundation that positions Alberta for the future. Over the last year, our economy grew at a strong pace. Oil production climbed to a record high of almost 4 million barrels a day. The average price of oil was $74.34 per barrel, slightly higher than the $74 projected at Budget 2024. Rig drilling activity increased by 4.4%, and natural gas production also increased despite weaker prices. Activity in the housing market also surged as Alberta remained the fastest growing province in Canada. We experienced our second year of rapid population growth. Many of these new Albertans moved from other parts of Canada and from around the world, attracted by Alberta's thriving economy and entrepreneurial spirit. Last year, we added 200,000 people to our province. That's like adding another Red Deer and another Airdrie to our province. That's a lot of Albertans, and that means a lot of services are required to keep up. That population growth outpaced job gains. So while the unemployment rate rose slightly to an average of 7%, Alberta added 76,300 jobs to our economy in 2024. This is significant and meaningful growth. With that context in mind, let's take a look at our year-end results. In the 2024-2025 fiscal year, revenue was $82.5 billion, and expense was $74.1 billion, leaving us with an $8.3 billion surplus. That's Alberta's fourth consecutive surplus in as many years and $8 billion higher than estimated in Budget 2024. Revenue was $8.9 billion more than budget, largely due to higher than expected revenue from energy resources, personal and corporate income taxes, and investment income. Resource revenue increased to $22 billion, primarily driven by higher bitumen royalties due to a lower exchange rate and a narrower light-heavy differential. Personal income tax revenue was a record $16.1 billion, or $516 million higher than budget, driven by strong growth in personal incomes and population. Corporate income tax revenue was $8.1 billion, up $1.1 billion from budget due to strong corporate profits in sectors such as oil and gas, construction, and finance. Alberta's low-tax environment is working and should continue to attract investment and jobs, helping to secure Alberta's economy. Of note, we also recognize the first portion of Alberta's tobacco settlement to help us recover health care costs related to smoking. This provided $713 million as revenue in the 24-25 fiscal year, with more annual payments coming in future years. Tobacco use has had a significant impact on the quality of life of Albertans, placing a considerable burden on our healthcare system. While this settlement represents only a small portion of the healthcare costs for treating cigarette-related illness, we believe it represents the best possible outcome following years of litigation. Turning to expense in 24-25 was $74.1 billion. This was $1 billion higher than estimated in Budget 2024, with increases for healthcare, education, and emergency assistance. We spent $702 million to fight wildfires and provided millions more in matching donations, evacuation payments, and disaster recovery programs. Another $1 billion supported producers, farmers, and ranchers facing ongoing drought conditions through many programs, largely insurance. As promised, we made significant investments in healthcare and education. We boosted health funding as the province began refocusing the health system around the needs of patients and families. More funding for education helped schools address enrollment growth, supported more teachers and support staff, and increased learning opportunities for vulnerable students. And we spent $7.2 billion on our capital plan. This year was notable as we launched the School Construction Accelerator program that will create about 200,000 new and modernized student spaces in the years to come. Over the last year, we completed 2 health facilities, 12 new schools, and dozens of road and bridge rehabilitation projects. We also continued to prioritize Albertans struggling with mental health and addiction by supporting the establishment of 11 recovery communities. Investments in the capital plan help to support jobs, attract skilled workers, open up local economies, and grow communities. After final calculations and adjustments, we ended the year with $5.1 billion in surplus cash. We have clear rules that guide our use of surplus cash. As legislated in the fiscal framework, half or $2.6 billion of the surplus cash must be allocated to improving the government's net financial position through either debt repayment or savings in the Alberta Heritage Savings Trust Fund. The remaining half goes to the Alberta Fund. Those funds can be used for further debt repayment, additional savings in the Heritage Fund, or one-time initiatives that do not permanently increase government spending. On March 31st, 2025, the Heritage Fund's market value was $27.2 billion, its highest value ever. This includes net investment income retained in the fund and our investment of $2 billion from Budget 2024. Taxpayer-supported debt was $85.2 billion as of March 31st, 2025, $3.4 billion higher than at the same point last year. That's because we made a strategic decision to pre-borrow for debt maturities that come due early in 2025-2026. Debt servicing costs were down in 24-25 to $3.2 billion, as the higher surplus meant we borrowed less than originally planned. Due to forward fiscal planning, Alberta continues to be the least indebted province in the country, and we intend to keep it that way. Our year-end results are solid, and the surplus is good news. But as you know from Budget 2025, we're forecasting deficits for the next 3 years, and we must be prepared to weather the storm. While oil prices have fluctuated in past weeks, ongoing unrest and geopolitical uncertainties continue to keep the price of oil unpredictable. We continue to experience trade uncertainties with the United States, and the tariff situation will certainly impact our revenues. Our growing population also creates challenges as we strive to make sure every person has access to health care, schools for their kids, and other public services they need. We must always keep our neighbours and communities safe as we face unpredictable but inevitable disasters and emergencies in the future. In Alberta, we face our challenges head-on, and our government has a strong plan to meet these challenges going forward, even in uncertain times. This is why responsible fiscal management is so important. Last year, we rolled out a responsible plan to provide for our growing province. We invested in the priorities of Albertans, strengthened health care and education, and kept people safe, even as wildfires tore through our beloved mountain town of Jasper. This year, we continue that work. While today's focus is looking back at last year's results, we must continue to make measured choices with Albertans and their futures in mind. Budget 2025 is meeting the challenges facing Alberta with responsible decisions that support and sustain public services. Our prudent plan keeps more money in the pockets of Albertans and their families while solidifying Alberta's economic foundation. We're investing where it counts today and saving for a brighter tomorrow. Thank you, and I'm happy to answer some questions.
All right. Thank you, Minister. And now we'll move to the media question and answer period. We have time for one question, one follow-up. I'd ask the media to identify yourself and your outlet before asking your question, and please move to the mic if you would like to start. All right. Go ahead.
Hi, Minister. Adam McVicker with Global News in Calgary. Can you walk us through just the difference? I believe it's a significant deficit next year, multi-billion-dollar deficit in Budget 2025. How we go from such a large $8.3 billion deficit or surplus in 24 to multiple years of deficits moving forward.
No, thank you for the question. So I think this is probably hard for people generally to get their heads around, but each fiscal year is a chapter in an ongoing story. And although a lot of the pressures remain the same, One thing that's always different, especially in Alberta's circumstance, is around the price volatility of oil and these other sensitivities. So in budget 24, we'd predicted WTI to be at $74, and it came in at $74.34, which is pretty amazingly close, I would point out. But we also saw a tighter differential than predicted. We were on the right side of the currency forecast. When we look at budget 25 and the $5.2 billion deficit that we tabled, that was with oil at $68. So $6 difference right off the top. And our sensitivities forecasted in budget 25 are about $750 million for every dollar difference in WTI. And that's increased. In budget 24, that was about $630 million. So as we have more bitumen oil sands facilities reaching maturity, that number becomes even more dramatic and impactful. So a lot of it is built into those sensitivities around the price. We were at $68 for this year, which is below industry average forecast. And you've seen what oil's done since I tabled the budget. We've been as low as 55. We were as high as 78 only a week ago, and now back down to about 65 today. So that is the driver of a lot of this fluctuation and unpredictable. Yeah.
How much, as well as the situation in the United States, playing into the forecasts coming up? The president tweeted or posted a little while ago that he's cutting off all trade discussions with Canada and threatened introducing a new tariff in the coming days. So how much does that uncertainty play into this deficit situation as well?
Well, we're going to have to wait till the end of August to update you all on the first quarter when we actually have some data behind it. But I would share with you, we definitely see that it's chilled investment across sectors. Any place that there's a final investment decision that hadn't been made previously, it's basically on hold. They need more certainty than this. One thing I would say that's in our favor is something that this surplus being larger than expected represents is that the economic handoff between last fiscal year into this one was stronger than we expected. I think that's definitely good news for this year. And to date, the tariff situation has been a lighter touch than we forecast in our baseline for budget 2025. So those things are in our favor, but the uncertainty is definitely chilling investment.
All right, thank you. And the next question in the room?
Hi, Minister. Edward from City News. I know in this fiscal year's budget, you have an average of about a 15% tariff rate. What happens if tariffs that are leveled against Canada are above that 15%?
It'll hurt more. Basically, we brought in 15% across the board and 10% on energy. To date, we haven't seen that. But if it's more impactful than that, I think in the budget we also had kind of a high and low case scenario that showed how dramatic the change would be. So it would be substantial.
And how does the province move back to balance once those tariffs, if they are imposed?
Well, that's the big job in front of us, is getting back to a path to balance. Like, not only did we table a deficit in budget 25, but you saw that we're projecting deficits for the 2 years that follow. And it will be more challenging if there isn't uncertainty, if there isn't more certainty on the trade file and this volatility we see in geopolitical concerns driving the price of oil in different directions.
Thank you. Are there any other questions in the room? No? With that, operator, can we please go to our first caller on the line?
We have a question from Emma Graney from the Globe and Mail. Your line is open.
Yeah, g'day, Minister. Thanks for taking my question. This kind of riffs off of what Adam was asking about, but this idea of energy revenues, I mean, and you've made this kind of comment, but how worrying is it that you're seeing all these geopolitical challenges? We're seeing oil prices just go completely wacky. And how do you factor in all of those challenges to become more resilient as a province when you're relying on, on oil prices and that resource revenue?
Well, I think it really shows why it's so important to forecast conservatively. I think first and foremost, I don't want to see those numbers elevated in a way that just gives more downside potential risk to the province. We need to come in with conservative forecasts, and over time that will allow the province to be in a surplus position more often. But back to the theme of your question, I view this, we had $22 billion in resource revenue this last fiscal year, and we've been in and around 20 the last few years. I view that very much as how we're able to have a $20 billion tax advantage over the next closest province. So although we have this volatile revenue in oil and gas and resources, we can't forget what a great opportunity that is for us. So we have to manage this. We have to manage the downside risk. We have to spend wisely, in the good years and bad, and that allows us to not have to react too quickly and cut spending in a deficit year if we can watch our operational expense line in the good years. But truly, it's a blessing to have this unique challenge around our revenue, and it gives great opportunity to all Albertans in paying less taxes and keeping more money in their pockets. We could do something different. We could take up that space and increase taxes, but that's certainly not what I hear from Albertans they'd like us to do. So it's a challenge, but it's a good one.
Thank you. Any follow-up?
Yeah, just on the question of pipeline, it's come up a lot, new pipeline to the West Coast for crude. I mean, are you factoring that into budget at any point soon, or what are you hearing when it comes to negotiations there?
I just know that the negotiations are ongoing around, how do we get to the finish line on some of these nation-building projects, seeking new markets, egress for our products. Definitely nothing in Budget 25 reflects any of those costs, but I do think there's a lot of cautious optimism in working with the new federal leadership, still saying a lot of the right things behind the scenes, but eventually they'll have to show us that in actual policy. We're not thrilled with C5. I'm not hearing from the investment community that they think that will bring more certainty to investment in this space. But definitely we want to give them a little time and work with them as much as possible to land some of these projects.
Thank you. Any follow-up? Sorry. Moving to the next caller on the line. Operator, please put them through.
Graham Thompson from the Toronto Star.
Yeah, thank you. Minister, just wondering, there's been a question asked already in some ways. You got this huge surplus from last year. You have people right now struggling with the cost of living, and you've got, of course, the teachers voted to take strike action. I understand that was last year, $8.3 billion, and the $5.2 billion, $5.1 surplus cash. Does anything from last year help you with this year in terms of operating costs or anything this year? Does any of that bleed over?
Well, definitely it means that we borrow less, which keeps our debt servicing costs down, which definitely helps long term into the future. And definitely the things we're seeing that drove that stronger economic handoff into this fiscal year speaks positively about the overall state of the economy. But when it comes to long-term operational spends, whether that's wages and labor, all of those things, we definitely view those looking toward the long term in a sustainable way. So it doesn't change really anything in that regard. All of our bargaining is done in the pursuit of fair deals that are based in market data. We don't want to have recruitment and retention challenges. We want to make sure that we are a fair employer in that regard, and with a growing province like we have, that's essential. But it doesn't really change those things going forward.
Okay, the follow-up. It's only 3 months into the new fiscal year, but of course you projected a $5.2 billion deficit. Is that still how you see things playing out at this point?
Well, a couple things, like was brought up in the previous question. To date, the tariff assumptions that we built into our baseline have been a lighter touch. That's a good thing. Also, the handoff from last fiscal year was stronger, which is also positive. But also, we're seeing this chill in investment across all sectors due to the tariff uncertainty. So, this is somewhat anecdotal, and we'll have to wait till August to have some actual data behind, where the tax filings are at and what we're seeing specifically. But I'd say there's, some good news and some bad news.
Operator, please put through the next caller.
Janet French from CBC Edmonton. Your line is open.
Hi, Minister. Thanks for taking my call. So this revenue that you're getting from the tobacco settlement, how do you plan on using that money? Will it be going into any health-specific expenses?
Well, I don't see it being dedicated or tethered to anything specifically. I think it's important to remember that this is basically payback for costs already incurred. So even in the last fiscal year, the health budget was over $1 billion more in actuality than we had budgeted in Budget 24. So we've definitely already spent it on health, but it's good. It's a good thing, and we'll have to use it wisely. It improves our overall cash surplus, which helps us in many fronts.
Next question.
And while you're looking at these numbers, we've also got these public consultations going on about a 15-year, 30-year passenger rail vision for the province. And we heard a couple nights ago in one of those town halls that it's going to cost tens of billions of dollars to start building out a high-speed rail network between Edmonton and Calgary, regional rail between airports and the big cities. How do you account for that kind of expense when you're looking at a couple of years in a row with deficits?
Well, I think if we were to proceed with something like that, you definitely would need a strong business case showing that it was the right thing to do for Albertans. We'd have to show the ROI to the province and how it's the right thing for right now. There's so many competing needs and priorities around capital across the province. It would have to prove itself in the business case.
All right, thank you. Now put through the next caller.
Jack Farrell from the Canadian Press. Your line is open.
Awesome. Thanks for taking my question, Minister. I'd be remiss if I didn't ask you for your overall response to President Trump's social media post an hour and a half ago, however long ago that was, saying, all trade talks with Canada are off. I'm essentially curious how much that raises your blood pressure to read that.
Well, it's just we're sitting here talking about investment uncertainty and this chilling effect on the economy overall, and this is a great example. I think even this morning before that post was made, people were feeling pretty good about the progress on the trade file between Canada and the U.S. So it just highlights this uncertainty is something that until it truly goes away, investors are not going to invest. We're not going to create more jobs and be all that we can be with this hanging over our heads. So I don't really have a specific response. I hope they can do their deals in good faith, behind the curtain, and hopefully it happens sooner than later.
Do you have a follow-up?
I do, and completely unrelated to that question. I'm hoping you can kind of just talk me through the benefits of having a narrower differential rate, and if you expect that or kind of hope that continues for the next year for sure, and maybe the years after that too.
Yeah, for sure. Well, definitely the narrower the differential, the better it is for us. It means we're getting more for our oil. When the differential gets really wide and is blown out, as we've seen in the past, it's usually because of bottlenecking and lack of egress options. We've seen it historically tight since TMX came online, and that is a great thing for provincial revenues. If production increased and we started to hit that transportation logistics wall again, you will see it expand again. But that's why it's important to have enough pipelines and optionality for our most important resource.
All right, thank you. Now moving on to the next caller on the line.
Emmanuel Prince from Radio Canada, your line is open.
Hi, Minister. If we look at the last few years, when we compare the budget that was tabled with the actual numbers at the end of the year and the end of year statement, Alberta's never on target. You know, like in 21, there was supposed to be a big deficit, and then there was a tiny surplus, and then 22, 23, 24, there was supposed to be some kind of surplus that got blown away, and the surplus is way higher, and we see it again this year. So how do you explain all these discrepancies between what you're tabling and a year later it's never actually what happened?
Well, back to the overall size and dramatic nature of these sensitivities, and in some of those years you're highlighting, and I'd highlight the year before we started the 4-year run on surpluses was a $17 billion deficit. We saw oil actually go negative, and then we saw it get as high as, I think it reached $122 when it came back. Operational spending, we're seeing these increases, but we're staying within the fiscal rules. We're staying below population plus inflation. But it's just the dramatic nature of these sensitivities on the revenue side, and they're getting more substantially impactful. Like the three big ones: the price of oil, the differential, and the currency. In budget 24, they were $630 million, $600 million, and $490 million, and we've seen in budget 25 it's $750, $740, and $560. So it's a grand challenge, but I think the point is to look at the average, what the trajectory is. We're going to be on both sides of this thing. We can't spend too much in the good years, and I don't think Albertans want us to pull back on spending in important programs in the rough years. So it's kind of a long-term averaging out process.
And your follow-up?
Yeah, it's on the tobacco settlement money Alberta's getting. So you said it's nowhere near the amount that actually Alberta spent in the last 50 years to treat the people who have, for example, lung cancer because of smoking. Do you have an estimate of how much it cost the province over the years compared to what $3.1 billion you're getting in the next few years?
Oh, billions and billions. I don't have that number. I'm sure Health could get that for you, and I'm sure it was part of the case that was made in the litigation, but I don't have that number. But just look at the size of our health budget. The costs of diagnostic tests, surgeries. It would certainly be in the billions and billions.
Thank you. And operator, can you please put through the next caller on the line?
Graham Thompson from the Toronto Star, your line is open.
Hey, this is great. Got a second question. Quickly, Minister, you mentioned the that $5.1 billion surplus cash, one-time initiatives. Do you have any plans for that one-time initiative this year?
Not at this time. It's kind of it's something that cabinets and the premier know exists, and there may be ways that it can and should be used in this year, but none of those conversations have been had. It's definitely not something that's been used a lot over the last few years since the inception of the fiscal rules, but it does exist, but no plans.
And your follow-up?
And just as a follow-up, yeah, as you mentioned the tariff talk, Trump's tariff talks have put a chill on investment. Has the talk of separation in Alberta put a chill on investment? I'm thinking back to what the CEO of ATCO, Nancy Southern, made that comment just a month ago, that all this talk is not being helpful, it's hurting the investment climate. So have you seen any chill on investment because of the talk of separation, potential separation in Alberta?
Well, I would say investment definitely requires certainty on all fronts. I don't, this is somewhat anecdotal, so I can't assign, how much investment risk is seen from, say, the talk of separation versus the trade uncertainty we're seeing with President Trump. But definitely investment-like certainty across the board. I'm in full agreement with you.
All right, thank you. And with that, that ends our formal Q&A portion. If you have any additional questions or follow-ups, please don't hesitate to reach out. My contact information is found at the bottom of the news release. We'd be happy to answer your questions. Thank you.
Great. Thank you all. Yeah.